Singapore REITs, real estate investment trusts, have been struggling for the past few years, but this could be about to change. Big time. With interest rates finally easing, top analysts from JP Morgan, DBS and Nomura are turning bullish on this sector, signaling a potential massive rebound ahead. But which REITs are set to benefit the most? Well, more importantly, are we looking at the perfect time to buy? Hey guys, Joey here, top tier MyZero trader in Philip Securities. Well, in this video, stay with me because I'm about to break it all down for you. Plus, I'll review the top 5 REITs, in my opinion, that are flashing strong bullish signals on my one good trend strategy, or my one good trend pro indicator. Alright, so make sure you watch this video all the way to the end. Let's dive in. So this is a news article from the Business Times, right? JP Morgan upgrades as REIT, Singapore REITs as interest rate is, right? Downgrade Singapore banks. So this is what is happening right now. We are seeing a bit of weakness in the Singapore banks, and over the past few days, we are starting to see strength in some of the REITs. So analysts are turning a little bit more positive on the Singapore REITs, right? Because of this environment of declining yields or potentially interest rates coming down even lower. So REITs, if you know, they are all heavily geared, right? They borrow quite heavily, and whenever there are any talks about interest rates going lower or going down, that's where the REITs will see strength. So JP Morgan on Wednesday, 12th of March, upgraded its rating on S-REITs to neutral from underweight on the back of declining treasury yields, which is something like what we call rates. Even DBS Group Research said in a report on Monday that it is now more constructive on Singapore REITs, right? At the current valuation of 0.8 times, the price to book ratio gives a yield of about 6.2%, right? So contrary to market expectations, we see a shift in the earnings trend. So this could be a good opportunity because whenever there are periods of declining yield, the REITs tend to benefit. And you can see that JP Morgan actually announced, right? The last 3 periods of decline in yields led to a significant rebound in the REITs, all right, and outperformance over the banks, right, over a short period of time. So that's why they think that, due to these declining yields, the REITs could potentially benefit again. Over the past few weeks, JP Morgan has observed that the interest rates in Singapore, right, has also declined by about 100 basis points, by about 1%, with the 1-month Singapore overnight rate, right, now about 2.4%. So it has declined a little bit. That will be a good thing as well. Borrowing costs are going lower. So this lower rate environment translates into more pressure on the banks in terms of the NIM, the net interest margin, but actually it's a good thing for the REITs, alright, because the REITs, it lowers their borrowing costs. JP Morgan top picks include CapitaLand Ascendas REITs, CapitaLand Integrated Commercial Trust, Fraser Centrepoint Trust, and Keppel DC REIT. I don't know, this might not be my top 5. Later we will go ahead to look at my top 5 based on what we see on the 1GT Pro indicator, alright? Let's take a look at what DBS Group Research analysts have to say as well, right? They're saying that the financing costs for the S-REITs will nearing their peak, right? With some REITs already starting to see savings, or they're kind of like reporting savings in their 4th quarter results. So borrowing costs are slowly coming down, and this could be what we call savings for the REITs. So both analysts actually pointed out that same thing, right? S-REITs or Singapore REITs tend to perform better during period of rate cuts and rate pause, all right, compared to when rate is rising. And DBS top picks would be CICT, FCT, Keppel REIT, Mapletree Industrial Trust, Mapletree Logistics Trust, and Parkway Life REIT. Well, I think one of them would be my top 5. Let's see how that plays out. So even Nomura Research has covered the Singapore REIT sector, right? What they say is right over here, all right, in the H, right? They say switch from overcrowded banks to fairly unloved REITs with the US slowdown worries. So for investors concerned about an increasing likely US slowdown, or there are now talks about a recession, right? Well, what they say is that they might want to rotate from the crowded Singapore banks to the fairly unloved Singapore REITs, right? Which is actually an asset class which has been underperforming because of higher interest rates, right? Over the past few years, interest rates are higher. Of course, now it's slowly coming down, and that's where this sector is starting to outperform. So historically, Singapore banks tend to outperform the S-REITs when US rates are rising. So now you can see rates are slowly coming down, so it's kind of like the opposite. Alright, now that we have covered some of the news article covering the REITs, right, as to why we are seeing strength, well, let's dive into my top 5 Singapore REITs that you want to put in your watch list for potentially more upside. We have seen some bullish signals coming out. It was weak, it was down, we had bearish signals previously, but now there are some signs of a reversal. So 5 REITs, very quickly, let me just dive right into it. So the first REIT right over here will be be Capital Land Invest. I think one of the analysts actually covered it as their top pick, right? So you can see very quickly for Capital Land Invest, well, you could see that the trend in the longer term, it was actually down just by looking at the REITs 100 days moving average and the 200 days moving average. Since 2023, 2024, it was down. But over the past few months, the longer term trend has started to flatten out. We are pretty much moving sideways in the longer term. In the short term, you can see it's pretty volatile. We got a bullish signal right over here somewhere in August, went all the way up, a bearish signal came out, and down we went, all right, from like $3 to $2.40. But let me bring your attention to what has happened over the past 2 weeks. Well, we have what we call a new bullish signal coming out. So this is what we call the 1GT. So 1GT stands for one good trend, right? This is a strategy that I've been using for more than 10 years now, and based on this strategy, I have an indicator. I call it the 1GT Pro indicator right over here, right? So with a click of a button, I can turn on and off the buy and sell signals. Look at this, right? Pump. There it goes, it disappears. Let me turn it on again. There it goes, it appears. Right, so we are able to set an alert for this. So I was alerted to this bullish signal for Capital Land Invest about 2 weeks back. You can see right over here, right? A bullish signal came out. We went up slightly, and more importantly, you can see that the trend, right, for this stock has started to turn up in the short term, right? How do we tell the short term trend? Well, we basically just look at the 20 days moving average. So it was down for like 4 to 5 months, right? You want to be careful, you don't want to buy it, right? But you can see down. About a month back, it started to flatten out. There we go. We got a bullish signal, and as another confirmation, the green 20 days moving average line has started to turn up. So there are some signs of strength, right? I would say right now we may see maybe a little bit of resistance right over here around the $2.70. Look at this, right? That was where we kind of like tested, we broke down, sold back down. So we might be nearing the 270, right? If you can break the 270, I think targets could be revised even higher. We might slowly push all the way up towards the $3 to $3.20 to retest levels we've seen somewhere in September last year. So that could be the upside targets, and I think if we can break like the 270, we may even see a new bullish signal, right? So this is Capital Land Invest, the first REIT you can put in your watch list for potentially more upside. The second REIT you want to watch as well, and that would be CapLand Ascendas REIT right over here, right? You can see that over the past 2-3 months, well, we actually found a bottom around the $2.45. Look at this, right? A couple of rebounds respected the $2.45 support level. And previously, if you look at it in like October, not good, right? A bearish signal, right? Similar to the previous REIT, all the way down. You want to be careful, you don't want to get in, right? Previously, we had 2 bullish signals coming out, and up it went. So over the past 3 months, well, finally we had 2 bullish signals. In fact, one just came out about 2 days back, and we are starting to make our way back up. So it seems like we have broken this resistance at about the $2.60 over the past few days. Now we are $2.62, so not too bad. I think you can stay above the 260 over the next few days, over the next few weeks. I'm not too sure when you're watching this video. That could be potentially more upside, maybe all the way towards the $2.90. All right, resistance, that was where we were somewhere in September last year, right? Look at this, right? So that could be kind of like a reversal opportunity to get back in. All right, look at this right over here, from 260 all the way to 290. Well, that would be about 11% upside, right? So that's one of the REITs that is in my watch list. We got some bullish signals. It looks like it is beginning to see strength again, especially above the $2.60. Okay, the third Singapore REIT that you want to watch, and that would be CapLand Intercom Trust. I think that was one of the REITs that one of the analysts covered as well as a top pick, right? So you can see for CapLand Intercom Trust, well, we have seen over the past 1 month 2 1GT, the one good trend bullish signals coming out, and you can see that the trend in the short term have actually turned from like down. You can see we have a couple of bearish signals. It starts going down. All right, so down, flat in January, flat in February, but since March it has started to turn up with these bullish signals playing out right now. So I look at it a few days back, and it started to move up already. All right, I think right now, let me go to draw this resistance level, maybe around the $2.15. You can see that was pretty much where we were in September. Look at this right over here. So we got some bullish signals in May, in July. It started to go up all the way to September, right? So now we are pretty much back to this resistance level at about $2.15, 2.15. So we are seeing a bit of profit taking near 215. That's normal because that was where we have seen selling previously, right? So I'm watching over the next few days. I think that's very critical if we can lift off the $2.15 resistance level. I can tell you that would be a good thing. We could see more upside momentum, maybe all the way to like 220. Let's see, right? I think from here to here we can do a bit of a projection, right? So that was kind of like the consolidation range to here, maybe all the way up to maybe $2.30. All right, after 2.15, right? That could be a new revised higher target, right? So this is cap length, Intercom Trust, one of the REITs that we want to put in your watch list. We have seen some bullish signals. It has gone a little bit higher. There could still be more legs to the rally. So let's move on to the fourth Singapore REIT I'll share with you. And before we even talk about this fourth REIT, guys, as I say, right, if you want to find out a little bit more about my one good trend strategy, or how, just by having an indicator, the one good trend pro indicator, we are able to get an opinion on any stocks, whether is it the REITs or the banks or the US stocks or Singapore stocks, in seconds, right? Just by looking at the bullish or even bearish signals. When you see a bearish signal, you want to be careful probably to get out. When a new bullish signal comes in, plus some other confirmations coming in as well, that could guide us to actually take a position to ride the reversal or to ride the stock even more. All right, so you want to find a bit more? Attend one of those free webinars. The link is right below the video. And in this webinar as well, I will share with you guys how do you actually filter out the top 1% of stocks, right? It could be the REITs, it could be anything, right? How do you actually filter out the top 1% of stocks, put them in a watch list, and then know exactly when to buy and sell them? That's so critical. Attend one of those free webinars to find out a little bit more, right? The link below the video. All right, so let's go ahead to talk about this fourth Singapore REIT that has came into my watch list. We got a recent bullish signal coming in, right? So you can see in December, not too bad. We got two, right? Not one, but two bullish signals. There we go. Started to push up all the way until a bearish signal came out. About a 27% gain in about 2 months. A bit of weakness, down, down, down. But let's see what has happened over the past 2-3 days. Well, finally, we got a new bullish signal coming out. All right, and if you look at the trend in the short term, so the longer term trend would be the red 100 days moving average and the blue line. So the longer term trend has been up, I would say, since last year. Very gentle longer term uptrend. But the short term trend was actually down since February. Look at the green line. It was down, 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 down. And what happens over the past few days? Well, it seems like there's top going down. In fact, I think right now it is starting to slope up. Does it make sense? All right, so if it starts to slope up, that would be a turn in terms of the short-term trend, coupled with the new bullish signal that just came out over the past 2 days. Well, that could be a reversal move, right? All the way up. Let me go to draw this resistance level, I think right here, maybe around the 60 cents. Look at this, right? 60 cents was pretty much where we were in December, January. We just couldn't pass it. Some bearish candles came out and we were pretty much capped below this 60 cents resistance. So we could be heading towards that, 60 cents resistance over the next few days, next few weeks, consolidate a little bit. But I'm watching if we can break the 60 cents pump, right? If we break the 60 cents, great, it'll be a good thing. There could be more upside momentum. Targets could be revised maybe all the way to 65 or maybe towards the 70 cents. And we may even have a new bullish signal coming out as well from the 1GT Pro indicator. Let's move on to the final fifth Singapore REIT that you want to put in your watch list for potentially more upside, and that would be Parkway Life REIT. All right, right over here, $4.05. So this counter has been on my watch list over the past few months. In fact, since like December, we started to see some strength coming back. It was like a bit weak, right? Look at this. This was in like July last year, even in September, all the way up. I would say from this bullish signal coming out, got a bearish signal in March, another bullish signal coming out in April. Bullish, going even faster. Well, from the bearish signal, about 17% upside, all right, and then started to come down, down, down. The short-term trend turned down, right? But the longer-term trend, all this while, you could see the red and the blue line, they're all pointing up. The red line was above the blue line, so the longer-term trend was up, right? So whenever the short-term trend turns back up, like what we saw over here, whereby we got a new bullish signal somewhere in like November, all right, so I had to push up a bit. We got a couple of bullish, not 1, 2, 3, 4. We got 5 bullish signals coming out. In fact, one just came out over the past few days, right? And we are starting to make our way back up right now. So I think it looks pretty good, right? The short-term trend has turned up somewhere in November, flat up. Now I think it's still kind of like pointing up a little bit based on this green 20 days moving average. So it looks pretty good, right? What could be the next resistance whereby some selling can potentially return. Well, let me go to draw this resistance level. I think very clearly that will be the $4.20 level. So we are kind of like approaching this 420 resistance, and that was pretty much where we were right over here in September last year. You can see that was actually where we had a pretty bearish candle. Look at this candle right up here, right? It went all the way up, sellers came back and pushed it all the way down, down, down. We have a long upper shadow, or like what we call a wick in the upper direction. Not so good. It means that sellers push prices all the way down and it closed somewhere at the low. And after that, you can see we started to head down, right? So that is a very key resistance level. It shows that selling could potentially come back near here again. Anything from like 420, 415, 418, above 410. I think that's where some selling can come back again. But doesn't mean once it comes up means we might crash all the way down. No, it just means that we might be seeing some selling over there. Take some profit if you want. But I'm looking at if we can't actually break the 420 resistance. If we can break the 420 resistance, we go to like 422, 425. I think that could be a new catalyst for even more upside targets could then be revised. Look at this consolidation, I would say right over here. So we are seeing a bit of a consolidation past 2-3 months. If you could kind of like extrapolate it right over here, maybe towards the $4.60. Well, that could be the next upside after the $4.20 resistance gives way. All right, so this is the 5th and final Singapore REIT that you want to put in your watch list, Parkway Life REIT. So there we have it, guys. This is pretty much a quick update on the Singapore REITs. Make sure you watch these 5 Singapore REITs, put them in your watch list for potential entry. And as I say, if you want to find a bit more about this entire one good trend strategy, or how perhaps you could have an indicator like this to guide you on when to get in, when to get out, and how to filter out the top 1% of stocks, attend one of those free webinars. The link is right below the video. Click on it, register for it, and that's where I'll share with you guys a bit more. Looking forward to share more in this webinar. And of course, if you have not yet subscribed to the channel, make sure you hit the follow button as well, so that when we go live in our weekly Ask Me Any Stock session, you will be notified as well, and that will really help out the channel as well. Thank you so much. Joey here. I'll see you in the webinar or in the next video. Take care.